Hello, everyone. I am Julia Carlson, and today I am answering a tax question we recently received in the office here. So here's the question. The names are changed to protect everyone, but John's father passed away, and his dad has $30,000 in a bank account. John will be splitting that money with his sister, and he wants to know if that money will be taxed. So, very good question. So here's the deal on inheritance. I would have to follow up. If this person was in front of me, I would be asking additional questions to ensure I know the full situation. But I'm going to assume that the only assets that dad has is $30,000 in the bank. So if that was the only assets he had, and I'll explain more about that in a second, then yes, they could split that with the sibling and there would be no taxes owed on that money as they inherited it. Because it is under the federal estate tax exemption of currently the federal estate tax exemption is like over $5 million. It's $5,700,000 something. And the Oregon, since we are in Oregon, the Oregon state tax exemption for estates is $1 million. So if your estate, when you die, add up all of the assets of everything, if it's under $1 million, then your beneficiaries will not be paying taxes on that. Now, here's the caveat. If some of the assets that you inherit are retirement accounts, specifically retirement accounts that are pre-tax, so a traditional IRA, a traditional 401k, a 403b, if you inherit those you do pay taxes on. But if it's just a plain bank account, something that is a non-retirement account, which seems to be in this case, then you would not be paying taxes on that. So I hope that is helpful. If you have any questions out there about taxes and you want us to answer them, go ahead to either message us, you can email us, you can leave a comment on the videos, and we'll make sure to do a video for you answering all those questions. Hope you have a great rest of your day.